Everyone. Thank you for joining our webinar today. We'll be discussing California employee classification topic. Before we get into the content of today's webinar, I want to go through a little bit of a housekeeping items. You can maximize or minimize the webinar pane during the presentation by using the red and orange arrow buttons. During the webinar, we also encourage you to ask questions. However, we will answer those questions as time allows during our Q&A session at the end of the presentation. If any of your questions don't get answered, we will reply back to you via email. Also, in the webinar pane, you'll see a question box that you can use to type your questions. So again, feel free to ask as many questions, and if time allows, we'll try to get them in. Second, to ensure good audio quality, please check your settings to ensure that the appropriate audio option is selected. If you are using a telephone, please click on the phone call audio option, or if you're listening through your computer, then please click on the computer audio option. All right, so we have some great presenters here today with us, and we have Jen McCabe, who is our partner of our outsourced finance and accounting practice here at Armanino. Jen has more than 25 years of outsourced accounting and finance experience with a particular expertise in startups and the advertising and creative production industries. She is passionate about seeing companies utilize the latest HR processes and technologies to maximize their efficiency, productivity, and ultimately success. We also have Dean Kwambo, our partner of our business management team here at Armanino. After spending about 12 years as an auditor at Armanino's audit department, Dean transitioned to our chief relationship builder for the firm. He helps numerous private, public, nonprofit companies address their tax, audit, outsource accounting, HR needs. So with that, I'm going to hand it over to our presenter, Dean.
Thank you, Sarah. Yeah, I just wanted to make a quick introduction about Armanino. Largest California-based CPA firm, fastest growing CPA firm in the country. If you don't know about us, we do work in all industries. Our largest sectors are technology, nonprofit, real estate, professional services, manufacturing. We are very proud to be one of the fastest growing firms in the country, 22nd overall, and the best place to work for the past 10 years running.
Okay, guys, let's jump right in. The reason that we're here today is that we're going to hit on a couple topics. We're going to take you guys through a recent California court finding on a company called Dynamics so that you understand what we're all talking about. We're going to then help you define employment. We're going to help you determine whether you're raising red flags for auditors to see, and then we'll let you know what the penalties might be if they determine that you're misbehaving. And then we'll finish up with helping you figure out how to fix your mistakes. And if we have time at the end, we'll have a little bit of Q&A. So I'm going to start with Dynamics. Dynamics was a company that had delivery drivers. They've been around for a while. In 2004, they said, wait a minute, we can save a whole bunch of money if we take these guys off payroll. And we decide to make them contractors. And we're going to let them determine when they want to work. We're going to let them provide their own vehicle. We're going to have them cover the cost of their own vehicle. And that way they're going to qualify as independent contractors and they don't have to be on our payroll. Now, the California court a couple months ago said, wait a minute, guys, hold on. That just really doesn't work for us. These drivers don't have other clients, generally speaking. A few of them probably had a side hustle, but they didn't have enough of a side hustle. They showed up wearing Dynamax t-shirts. That's a big one. They had a logo and they represented the company everywhere that they went. And their work was sourced by Dynamax. Dynamax, at their sole discretion, sent them on these errands and paid them to do their job. So the court said, you know what? Using a common law definition, they look and smell like employees, and we're not going to let you get away with it anymore.
So this makes you wonder right now, did this happen, Jen, because of, you know, obviously the growing gig economy that we're seeing and all of the different things? Is that why? Is there going to be some kind of attachment from this case to the gig economy? Is that what people are looking at, or what's going to happen there?
Absolutely. And what they did was they joined California with a lot of other states that are adopting the ABC test. So they said, that's not working. And ultimately, their goal is to take care of workers. So they believe that in the gig economy, workers are missing out on benefits. And that's really what the government is about. As much as we all think it's about penalizing employers and business, they come from it from a labor point of view, and they want to look out for folks.
Go ahead.
So the old days, a lot of people listening to this are going to say, wait a minute, I know how to classify a worker. And there was a 20-question test that came up in 1989, and since 89, it's gotten more and more specific. The 20-question test really established what degree of control the employer had over the worker. And if you satisfied 13 out of 20 tests, you'd go, okay, the preponderance of evidence says this person has a lot of control over their day-to-day gig. We're going to say they're an independent contractor. But this test, this ABC test, is a 3-part test, and it completely replaces that 20-question test. So there's really no gray area anymore. There's no subjectivity. They're trying to eliminate that. So the way that I've decided to present the ABC test is upside down. This should probably say the CBA test for Jen McCabe. I put C first because I think it's the easiest one to answer. Does this worker have their own business? And if they do, they have insurance. They have probably got a federal tax ID. They might have their own staff. They certainly have a license, a business license. So that's a pretty easy one. If they flub that test, you need to just move right on and put them on staff.
Okay, Jen. So that raises a question then. You know, when you talk about does this person have business, one of the reasons that some people want their own business is so they could have their own, they could control their own tax situation, right? So what if someone tells you that they don't want their taxes withheld? What does that tell you?
Well, right away you should say, okay, that's totally cool with me. Show me your business license. Show me your federal tax ID. Let's look at your website. Do you have staff? And they should roll out the carpet for you right away. And if they fumble a bit and they say something like, well, I just really don't want taxes withheld, your hair should stand on end. What hair you do have, I mean.
Don't pick on me, Jen. Come on.
So I think that at that point, everybody needs to know the burden is on the employer. So it's not up to them to tell you what to do. That's the other thing the court made really clear. It's not up to them, it's up to you. And you need to say to that person, look, I feel for you, but this is up to me and I can't stomach the risk. So the next test is the work that this person is doing for you normal for your business? Is it a title? Do they have a title that fits in with what you do? So we're an accounting firm and say it gets busy around here in busy season. We have to put anybody on staff who augments our team during a busy season, even if they have a CPA license, even if they have their own CPA firm. If they come in here by themselves and they work here with us, we got to put them on payroll. If we farm the work out to another firm and they use their staff to do it, that's different, okay? The example that the court used is a plumber comes into a professional services firm. The plumber isn't normal, okay?
Got it.
That guy, he might be operating under a social, he might be a sole operator, but he's going to have a contractor's license, and he's not an accountant. And then the last one is what they put first. The last question is about degree of control. This one question replaces all 20 of the former tests. And it's really, again, does this person look and act like an employee? And if so, they really are an employee, and you got to stop faking it.
So, well, yeah, let's go into some details on that specifically. Like, you know, what does that mean in terms of control?
A good
like
example.
a title, an email, business card. Like,
Yeah.
what are we talking about here?
Do you tell them when to show up? Do you insist that they wear a certain outfit because they're out representing you? Do you give them a business card and not let them represent their own business? I think the biggest question I get these days is, but they work at home. They have their home office. in the current day, we all can work wherever we want to work. So a remote worker absolutely isn't going to satisfy that control question anymore. You can control someone if they're working at 6 a.m. in their pajamas. They're still your employee.
Right. So is control, we know that you said CBA test, right?
Mm-hmm.
So control that's what? Not the most important thing?
I
Or
think
it is?
that it's very important. It's just that it's harder to define because, as I said, it encompasses the former 20 question test, which was very gray and very subjective. And you and I can decide that I work for you, and then we're going to fight all the time about who's really in control. Trust me.
There you go.
Okay. All right. So if you're listening and you're worried and saying, gosh, what am I doing here? And am I doing anything that's going to get me caught? Here's the list of red flags. The top 2 are things that you do to get noticed by the government, get an auditor's attention. So the first 2 are giving one person a 1099 and a W-2. Indicates you're a little bit confused about what they're doing. Dynamex did exactly that. Now, it's even more acute if you give someone a 1099 and a W-2 in the same tax year. So where I see this a lot is people hire someone and they say, look, they use the word probation. You're on probation for a couple months. We're just going to test you out. And if you satisfy it, we're going to hire you. Well, that person's role didn't change. They're still doing the same exact work. They were always an employee. If you think that someone's going to be on staff, if you even think they're going to be on staff, you should put them on staff right away.
So you're saying if you have a future intent
Yes.
that they're going to become an employee, you're saying start day 1 as an employee.
Absolutely.
Okay.
So then the next question is, so Jen, how do I do that? Because then I might want to fire them. What if I hate them? So what you do is you do some good letter writing and you give them an offer letter that clearly says you are a full-time employee, but you are also a temporary employee. And we're going to talk about your status in a couple months. And that makes it nice for everybody. They know that they got to prove something to you. And you don't have to give them fringe benefits until they become a permanent employee. I don't encourage you to do that for a really long time. I'm not even sure why you would do that for more than a very brief time. The next one, this is a big one, unemployment claims for non-hired persons. So if someone goes and files for unemployment and they were never on your payroll, that's a big bummer, because usually the unemployment office then sends you a notice and says, yo, somebody's filed for unemployment. And your first reaction is to say, are you kidding me? They weren't on payroll. The problem is that that person feels like they were an employee a lot of the time. And that's an indication that you have a common law employee-employer relationship. That's the first problem. The second problem is the way that most people answer these claims. They get righteously indignant and they start using words in their response to the EDD like, or sentences that start with this employee ... right away. I see that a lot and it's hysterical. Or a big one is, hey, this person was only employed, the word employed, for a few hours one day. Now the ABC test we just went over said nothing about the duration of the assignment.
That's key. That's
Absolutely.
That sounds like a big deal.
It's a huge deal. So yes, your risk is lower. If I only pay you to do, $20 an hour for 3 hours and I paid you $60, my risk is really low. But what if I paid you $60 and then you run off to the unemployment office and file an unemployment claim? So I can get caught really easily right away, or later on down the road, say that person files for unemployment, gets unemployment, you don't dispute the claim because you know that you're just going to raise eyeballs, right? Say you don't. Later, they're still going to notice that you had an unemployment claim against you, and then they measure it against your quarterly payroll returns, and that person doesn't even show up on your payroll returns. So these claims are a big old deal.
Got it.
Okay, so then an auditor comes on down, and usually before they come to your office, they scrutinize every one of your 1099s. So what's important about that 1099 and W-2 question is, say that you were a plumber and you came into my accounting firm and then you got your CPA license. And so I put you on as a W-2. I'm going to get scrutinized because I hired you, Dean, and I'm going to be okay with you. But in the process, all my 1099s are going to be scrutinized, and the EDD starts by phoning the 1099 recipients, not you. They call them, and they ask them tricky questions. Then they come into your office. And the minute they walk in your office, if you start saying the word freelancer, you're in a whole lot of trouble. When they look at your records, your payment records, and they see that you've reimbursed expenses for a vendor, and some vendors do bill for airfare or mileage or something, they're going to look at that and they're going to see if you made them adhere to your expense reimbursement policy just as you would an employee. That might or might not be okay, depending on other factors. The big one is you give them an email address. Worse yet, you give them a business card. Then you're out of luck. The end of the discussion comes quickly. One that I've seen that seems baffling to people when they read this is that some people give contractors fringe benefits. I've even seen someone put a contractor on a 401k. It's hilarious, but they do. Now, that's a dumb mistake. But one of the mistakes I see is that contractors are paid for sick time or vacation time.
That sounds like an employee.
That's exactly right. And what people don't understand is that sick and vacation are fringe benefits, just like a medical plan. If you take a sick day and you get paid for it, it's the same thing as me helping you with your medical plan. So that's a problem. If they see an invoice from a contractor that says sick day, the discussion is over very quickly. And the last one, and you might know more about this because you're an auditor, is that you need to check for terminology on your financial statements when an auditor comes into your office. There are certain things in your financials that are going to get their attention. And they're going to select certain accounts and they're going to look at them very closely.
So Jen, just tell us what those accounts are. Put everybody at ease. What are some of those accounts that always get attention, with regards to terminology? Are they called specific things, or is there a line item on the P&L that people sometimes code to that are just going to get a lot of attention?
No matter what, if you have a line item that says outside consultants, they're going to pull absolutely everything from that line and look at it. If you've accidentally put an employee's expense reimbursement there, they'll look even closer at all your employee expense reimbursements too. The other, of course, the freelance word is a bad one. Then the thing that they'll look at is temporary staff or temporary wages. And they will look at that line item. And if it doesn't tie to your payroll records and somebody pops out who's coded there that you actually called an employee, they're going to notice. They're going to absolutely see it.
Got it. So it's almost like if we're listening in right now and we have line items in our P&L that are called temporary staff, outside consultant, freelancers, and then the other one that you said, it's almost like, well, then we better start doing these ABC tests for ourselves immediately.
Absolutely. It's
Okay.
time to start looking at it and paying attention, because the EDD in California in particular has been really vocal about the fact that they're hiring more auditors. At the same time, they're cutting office hours in their budget. So, you do the math. This is very good. This is good work for them if they can get it.
Right.
All right. So let's say you go back and you review everybody and you start freaking out. What are the penalties? Alternatively, I'm sure there are people listening who are thinking, big deal. What are the penalties? So if you end up in an audit, the cost is easily $1,000 a person, even if you come out on top. You have to explain yourself. You have to hire someone like me to help you, or maybe you hire a labor attorney. And then you have to go back and reclassify people, and that means paying Social Security tax, paying unemployment tax at the federal and state levels, getting work comp insurance for people, and usually having to look at your work comp insurance. You're supposed to have work comp to cover independent contractors, by the way, if they can't prove they have their own. But usually that's the next thing that comes pile driving down there. So it's very expensive. And I want to give a little bit of a heads up to the HR and accounting professionals who are listening today. In 2010, the EDD made it known that they would fine experts, as we're called, who knowingly circumvented the rules, or, this is key, coached a client on how to circumvent, or a vendor. So what happened was a couple vendors were told, look, go get your LLC, set up an LLC. Then they went and realized they had to pay $800, they had to file an LLC tax return, and they raised hell. And so the EDD said, listen, if we catch y'all coaching people, you're going to be fined personally. Okay?
Uh-oh.
So we all need to know the rules, and we need to help our clients follow the rules. All right? Now, if you're wondering how to fix yourself, and you go back through your records and you go, okay, what happens when I find the problems? I shouldn't even be saying this. There's one way to do it, and that's the only way, and that's the way I've listed first. But the fact is, it's super expensive to comply. It's super expensive to turn your big boat around midstream. So the thing you're supposed to do is go back, and I would advise you to do this only in the current year if you go backward, and reclassify the money that you paid to contractors as wages. So if you paid someone $800, go back, gross it up, and pay them only on a W-2 this year. Reclassify every 1099 payment that you gave them. So you're going to pay tax in that situation, and you're going to have to communicate with those people so they know what's going on. It is absolutely the least risk and the most expensive way to remedy your situation. If you just want to start now, that's another way to remedy your situation. You put the worker on payroll and say, look, I was doing it wrong. You're now on payroll. These are the folks you're going to give a W-2 and a 1099 in the same year. The government, if they come at you, you can say, look, I did my best. I changed. I did everything I could possibly do as fast as I could do it. The last solution, there's a little bit of uncertainty and risk, but what you could do is spend the remainder of this year hiring people correctly, identifying the people where you think that you're probably making a mistake, write and issue policy statements, train everyone on your staff, and convert your policies on January 1st, 2019, and do a really clean cutoff. Again, if the government comes in, you say, look what we're doing, we're taking action to fix ourselves. I think that's it for me right now. Do we have questions for people? Do you have any questions, Dean?
Well, I think, what it really feels like listening to all of that is really it comes down to just substance over form. At the end of the day, is that if it looks like an employee and smells like an employee, then you better treat them as an employee.
That's the safer way to go.
Yeah. Okay.
Yeah, definitely.
And then if you feel like, you might have some gray area, then, we definitely want to work with an expert to figure out how you can rectify, right?
Yes.
I mean, just don't go, head on into it, but let's figure out the right strategy to do it.
Yeah, I think people are avoiding it because they think it's too expensive to put people on payroll, but the expense of getting caught definitely outweighs that. We have a question. If a catering and delivery company hires contractors to do deliveries during lunch hours to corporate companies, should this person be a contractor? Based on dynamics, I would say no. You need to put them on payroll because you're providing them with the work, the clients. You're telling them how to do their job. And again, even though they're providing their own vehicle, it sounds a lot like dynamics. Okay. Again, I want to go back and reiterate that if you only employ a person for a couple hours or days, that's not the answer. So everybody needs to get comfortable with offer letters that say, I'm going to hire this person part-time, or there's a term full-time temporary payroll that you can use in your offer letters. Instead of deciding that because someone doesn't work full-time that they're not an employee, just get comfortable with the kinds of employees that you can have. Not everybody has to be full-time. Not everybody is eligible for fringe benefits. And in terms of what the risk is of getting caught, the risk is pretty high. We've gone over that. You get yourself caught by answering EDD questions incorrectly or by having an unhappy person leave you. One of the funniest EDD claims I saw recently was a person said that they were fired. They were never on payroll, and they actually laid out all the reasons that they were fired, and it clearly indicated that they had been under control. They thought they'd been under control, and the employer answered with, well, here's the reasons I fired them.
Oh.
And they gave all the reasons, and it turned into a fight. So I called an EDD auditor last week that we worked with years ago who gave me the example, and we laughed together about it. It was quite clearly an employee relationship.
So Jen, we're getting a few questions, and let me ask a few what our participants have asked here. One of the persons said that I am a real estate development consultant with my own sole proprietorship firm, multiple clients. I have insurance, and would I need to create LLC to meet requirements? Otherwise, I'm completing projects like house people as well.
If you are a consultant, you should not be forced to start an LLC. This is the United States of America, folks. You should be able to operate your sole proprietorship. So my answer is, you should have your own marketing materials that clearly show that you're separate. You should have your own business insurance for your business property. You probably have a computer that you need to have a rider on with your insurance. And I would make sure that when you're billing your clients that you put your business license number on your invoice. In most jurisdictions, certainly in Southern California where I live and work most of the time, you're supposed to have a business license if you are operating a business. So all you need to do is show that, put it on there. Your website would also be a good indication. Your own business cards would help you indicate you're independent.
All right, and then we are getting a couple more. We're going to answer just a few more questions. If we run out of time, everyone, we will send you an email answering them. Susan asks.
Oh, wait, I just saw one I want to answer. I saw someone saying that they have a former employee who's coming back to help with a project. That person absolutely should be on payroll. Unless you can show that that project has really nothing to do with the normal course of your business, this person already has an established employee relationship with you. So be careful with that one.
All righty. And then we have a question, are international contractors a risk?
They're not if they're working overseas. They are going to have their own tax and license issues. They're not going to be so much under your control if they're in a completely different time zone usually too. But you need to be careful with that. And a lot of times immigration attorneys come into that discussion. So if you need an immigration attorney, that's different.
Right. And this is going to be our last question. For the C on the ABC test, you had indicated that the contractor should have a business license or a Fed tax ID. If they are consulting on the side and they have a full-time job or looking for a job and they do not have a business license or business insurance, is that a red flag? Is federal tax ID to confirm a social security number?
Okay, a social security number is not a federal ID, a federal employer ID, we should call it. So you don't need an FEIN if you're not employing people, and you can use your social security number. But yes, you should have a business license. That's having a side hustle. That's like being an Uber driver, by the way. Uber, I hope you guys are thinking about what this does to Uber. So having a side hustle does not mean that you qualify to be an independent consultant, depending on who you're working for. And it's up to the person that hires you to correctly classify you.
All right. Thank you so much, Jen and Dean, for being our presenters here today for our webinar. Again, folks, thank you for all your questions. We will answer them via email. Also, a lot of you guys have been asking, are we going to get a slide deck or what's going to happen? Well, you will receive an email within 48 business hours with the link to the slide deck and the recording of this webinar. And if you need to reach out to our partners here with any specific questions, their email addresses are on your screen right now. And then please remember to follow us on social media. And there's a lot of articles and content that we produce, and there might be some of your answers might be on there too. So thank you everyone for your time, and hope you have a good day.